down in Johannesburg is Mamello Matikinca, who is from RMB, economist at that institution. Let's have a look back at the week that's just gone by in terms of macroeconomics and also have a look at some of the data that might be coming out next week. Mamello, thanks very much for joining me this morning. Tell me about the PMI data, because there was every chance it was going to dip below 50 after the previous month's reading of 50.2, but seasonally adjusted, up we go to 54.2. I think that's terribly encouraging.
I think on the headline level that number was quite impressive, but if one looks at the unadjusted figures, it does seem as if the PMI dropped below the 50 level, meaning that it wasn't as strong as it has come out to be. So this is more or less in line with what we're seeing globally. So if one looks at what's happened to global PMIs, those haven't been performing relatively well. There's always a seasonal factor in the January numbers, which should see more of a fair representation of the number in the February figure that's coming out.
Yeah, indeed. Vehicle sales now, I mean, vehicle sales have been under pressure for so long, but maybe with the oil price coming down, I mean, in the United States, for example, SUV sales have gone through the roof over the last 6 months. I mean, I wonder if that sort of factor might influence future vehicle sales figures. 100%.
I think the short-term outlook for vehicle sales is looking quite promising. So although we did see that contraction to 1.2%, from 10.7% I think it was, we think in the short term vehicle sales should continue to improve, and as you rightly mentioned, the decline in the oil price does mean that household consumption expenditure should see some benefit. So we're expecting sales to improve in the short term. However, I think if the government does implement that fuel levy in the February budget, we may see some slowdown in vehicle sales moving forward. But in the short term, we're definitely expecting our sales to improve.
What about business confidence? I mean, when you see what is happening in South Africa this morning, in other words, an hour and 20 minutes ago, more rolling blackouts are initiated by the power utility Eskom, I would imagine that people get a little bit depressed about business confidence, and therefore we could get negative readings in the future.
100%. In December last year, for the fourth quarter, we saw that business confidence index actually move above 50 for the first time since 2013. I think the blackouts that we've been seeing will weigh on confidence, and as Saki pointed out yesterday in their business survey, which doesn't really measure sentiment but it monitors certain indicators, it does seem that businesses are concerned not only about the planned load shedding but rather about the unannounced load shedding. In the paper yesterday there was mention of producers going to work after being told that there won't be electricity, only to find that there's electricity. So that should weigh on sentiment quite significantly moving through this year.
Yes, indeed. What about next week? What have we got coming up, Mamello?
So next week we have production side data coming out, manufacturing and mining. Expectations there. So if we look firstly at manufacturing production, our expectations is for manufacturing to actually have improved. So while we note that we did see electricity outages in December, more specifically in the first week of December, the trade numbers that were released last week surprised quite significantly to the upside. So we saw exports actually jump by 13% year on year. And if one looks at the breakdown of that survey or that detail, we see that base metals performed quite well. And those account for around 20% of total manufacturing production. So if one takes that into consideration, and as you pointed out earlier that the PMI was actually above 50 in December, we actually expect to see an increase in manufacturing production for December. In terms of mining, so what we saw towards the end of the year last year was Lonmin, I think, reported that they had to fix a furnace at one of their mines, and some of the gold producers actually reported losses for the last quarter of 2014. So we expect mining to not have performed quite well. So we expect it to still remain in contractually levels, so around about negative 0.7% from the negative 0.4, if it was, if I'm not mistaken, that we saw in November.
Just a very quick one, that surprise trade surplus that we saw this time last week of 6.85 billion positive. I mean, was it all to do with a reduced oil import price? Was there something more to it? Is this a trend that could become a trend that could become a trend?
I think just in terms of the trade account, just relating it to the current account as well, and the oil price. So what we should see, well, the oil benefit to the trade deficit should improve the terms of trade and ultimately improving the current account deficit. We're expecting it to narrow quite notably to around 4.8% this year. But we should see it actually deteriorate in 2016 when we see a rebound in the oil price in 2016. So for this year, the oil benefit will come through in the trade numbers, but next year we're expecting to see a further deterioration.
Mamello, thanks very much for your insight this morning. That's Mamello Matikinca, who is from RMB, economist at that institute.